Global stock markets have fallen, driven by a sell-off in bank shares amid fears over bad loans by regional U.S. lenders. Alarm was raised after two American banks, Western Alliance Bank and Zions Bank, revealed they were exposed to alleged fraud by borrowers.
When you see one cockroach, there are probably more, so warns JP Morgan boss Jamie Dimon, as concerns bled into European and Asian markets. Let's get straight to some analysis now with Matt Maley, Chief Markets Strategist at the investment advisors Miller Tabak and Company. Thank you, Matt, for joining us. Really good to see you. So, Western Alliance Bank, Zions Bancorp, not many of us over this side of the pond will have heard of these banks. I mean, how are these problems feeding into the wider market, and why is this impacting stock markets over here and in Asia, hitting the shares of big banks like Barclays and Deutsche Bank?
Well, I mean, there's a couple of different reasons. First of all, it wasn't that long ago, just not even 2.5 years ago, that we had a regional banking crisis with a mini run on the banks here in the U.S. And so that's kind of clear in people's minds. And then, of course, it also wasn't all that long ago, 15 years ago, when we had the great financial crisis. So this is something that people do remember. I guess the one thing is that the issue of, especially in the private credit market, people have been talking about this, that it could be a concern at some point. They've been talking about it for months, but it's kind of been behind the scenes. This, plus Jamie Dimon's comments about cockroaches and such, has brought it more to the forefront and got people concerned about it. So, and I guess the other thing I would say is that people are asking a lot of questions, and it won't be fixed by a tweet from President Trump, like some of the other issues surrounding the U.S.-China tariff issue has in the last couple of weeks. So there's definitely a little bit more fear in the marketplace right now.
OK, well, we'll get to some of those points you just raised, but other regional lenders, though, are they in trouble, and are there wider concerns about the broader economy, perhaps linked to the tariff war?
Well, I mean, again, that's the bigger concern, and especially when you have a stock market that's as expensive as it is today, and a lot of people talking about bubbles. I mean, I guess my point is that a lot of people are thinking that these are just one-off issues. But, first it was a one-off issue with Tricolor, and then a one-off issue with First Brands, and now this, and a couple of others. People are starting to question, is this really something bigger? And if it is, that's something that could really have a negative impact on the economy, especially with the employment picture starting to be starting to show weakness in recent months. So again, one of the biggest things is that the stock market is so stretched. And a lot of people talking about bubbles, that things like this make people a lot more nervous.
Well, yes, and just to pick up on one of your points, there are worries about this car loan company, Tricolor, and the car parts maker First Brands both failing. You talked about the private credit market. What is that, and is there concern about the quality of deals? And just to pick up on what you said about Jamie Dimon, is he right about a bubble?
Well, I mean, he is not the only one, of course, been talking about bubbles, and he's worried about things getting, worse than most people are looking for. Now, he has been cautious for a couple of years now, and things have gone on just fine. But at the same time, private credit the problem with private credit is you don't have a good idea. They talk to it about they say mark to market, but and those regular corporate bonds are marked every single day. And it's like what they're using now is the term mark to myth, because nobody knows for sure what these things are really worth, and that makes people much more nervous. And especially, I mean, one of the things that I follow is the CDS market, the credit default swaps. And what that does is that measures, how much people are willing to pay insurance. In other words, what they'll pay for insurance against default against corporate bonds. And for some of these banks, they're starting to rise. So, that's the only thing we can look at, because we don't have a good idea of where these things are really trading. So again, that uncertainty raises fear in the marketplace. And you look at the way these regional banks are bouncing back today. Yes, they're bouncing back, but not in a major way. So again, people are the uncertainty of the unknown, the fear of the unknown is what people are creating this problem with the markets.
Well, indeed. Matt, really grateful for your insights today. Matt Maley, Chief Market Strategist at Tabak and Company. Thanks so much.